This show is produced by the Hartman Media Company. For more information and links to all our great podcasts, visit hartmanmedia.com.
Hi, Sep Bakam from Orange County, California. I thought the Empowered Investor event was amazing. This is actually my second time attending. Last one was about 15 years ago. It's a great event, awesome speakers, talk about everything from investing to property management to finding great teams, tax, legal, strategy, and all types of creative software solutions to help make investors successful investing out of state where the numbers make sense.
Welcome to the Creating Wealth Show with Jason Hartman. You're about to learn a new slant on investing, some exciting techniques, and fresh new approaches to the world's most historically proven asset class that will enable you to create more wealth and freedom than you ever thought possible. Jason is a genuine self-made multimillionaire who's actually been there and done it. He's a successful investor, lender, developer, and entrepreneur who's owned properties in 11 states, had hundreds of tenants, and been involved in thousands of real estate transactions. This program will help you follow in Jason's footsteps on the road to your financial independence day. You really can do it. And now, here's your host, Jason Hartman, with the complete solution for real estate investors.
Greetings, empowered investors. Welcome to episode 2299. We've got a lot of stuff to cover today, and amazingly, the next episode will be 2,300 episodes for this show. So it has been a long journey, and we're going to continue it for hopefully a very long time. Got a whole bunch of things to cover with you today, but first, some very sad news, and this is my beloved dog for the last 13 years. Coco passed away. A lot of you knew her. She attended all of our conferences, all of them, except the last one. Empowered Investor Live was the first conference that Coco missed in 13 years in her lifetime. She, 2 months ago, got a vaccine she shouldn't have had. It was against my wishes. The vet insisted. Coco was staying with my mother, and my mom just fell in love with her. And I didn't update her vaccines because the vet told me not to, because it would trigger her autoimmune response. And, I had treated her for that over the years and spent a lot of money on that. And the vet insisted that she get this vaccine. And 2 months later, the dog is dead. That's not the whole story, but the whole story is, well, my mom was at the Empowered Investor Conference. Coco was playing ball, and, she hurt herself a little bit, not a big deal. She kind of twisted her hind leg a little bit. And so my mom took her to the vet, and the vet gave her a painkiller. And between the vaccine that really messed up her blood work, as it had before over the years, and it's why I didn't update her vaccines, because the prior vet told me not to, and I agreed with him. Between that and this painkiller, I think it's called carprofen, which I did research that a little bit. Coco just went downhill very quickly in about 2 days. And she spent the day at the vet, and then it got worse and worse. And my mom rushed her to the emergency vet, and they performed CPR 4 times. And they revived her three of those times, but the last time just didn't work. She wouldn't come back. So we lost Coco. What a sweet dog. That dog went to 24 countries with me. I traveled everywhere with her, and some of those countries many, many times over. She was at all of our real estate conferences. Many of you listening have met Coco, and I've got all sorts of great pictures with you playing with her. And anyway, so this was just over a week ago, and we had a funeral for her last week, right before Good Friday, and a burial. And there it is. If you're watching on video, you're seeing all these pictures. Yeah, that was her life. These are some of the last pictures of her alive at my mom's house. What a beautiful, beautiful dog. She was my first puppy. I never had a puppy before, and I got her at 8 weeks old from the animal shelter in Tempe, Arizona. My other dog had passed away about a month earlier, and I always adopt my dogs from the animal shelter. Coco was my 5th dog, so I thought I would start looking about a month afterwards. After grieving for about a month, I thought, I got to start looking, because if I want to get another dog, it might take months and months to find one. And it was just, God's will or fate or whatever. Someone surrendered a litter of 5 puppies, and they had a raffle for these dogs. And they said, well, you got to come back on, I don't know, I think it was Tuesday. You got to come back on Tuesday at 11 a.m. And so I showed up there promptly. And, there was a small crowd of people. And we entered the raffle, everybody did. And there were the 5 puppies that people were going to pick. And I got the first pick. I literally got the pick of the litter, as the saying goes. So that was Coco's life, and it was a great one. She was my first puppy and my first female dog. So never raised a puppy before her, always had full-grown dogs when I adopted them. Anyway, I can't talk about this because I get choked up. All right, so let's talk about the market. And with the way the market is now, having been just very flat and boring for the past year and a half, I mean, someone would argue even longer than that, maybe 2 years, interest rate spikes 3 years ago, and a very just kind of boring, flat market that's not exciting to anybody at all. But we have got to look at the big picture. We got to back up and look at the big picture. And I thought this piece out of one of my newsletters that I just read the day before yesterday summed it up perfectly. It says, a perfect storm. What's breaking the housing market? Let's lay out the structural damage first. Mortgage rates are spiking, driven by ballooning federal deficits, a bond market that is increasingly hesitant to fund U.S. debt. 30-year mortgage rates are hovering around 7.5%, pricing out millions of would-be buyers. Now remember, rates are even a little higher for non-owner occupied, slightly higher than that. Next point, construction is getting crushed. Now, I've been talking about a lot of these issues on the show. You've heard me talk about them, but this just says it differently, and it's really good points. Construction is getting crushed. Tariffs on steel, aluminum, and other building materials are pushing development costs up 20 to 30%. At the same time, insurance premiums are skyrocketing, particularly in states that are climate exposed. And, if you think about it, remember during the California wildfires or the LA, well, they weren't wildfires, but the LA fires, we'll call them that, and how they canceled all of those policies. They just made it too hard for the insurance companies to do business. So they just thought, we'll take our business elsewhere. And that is going to be a very, very big rebuilding problem. Florida, another climate exposed area, obviously, is a much more mixed thing, because if you're buying newer properties or owning newer properties in Florida, they just don't have that exposure. I mean, I talked about my insurance rates on my Florida properties, and they went up from a percentage standpoint, a decent amount, but from a dollar standpoint, not much at all, just about $600 more per year. No big deal, no big deal at all. But remember, the thing we have in the housing market that acts much differently than other markets, whether it be stocks, precious metals, crypto, anything else, right, is we have very inelastic supply. And so it is very hard to create new housing. And we obviously have a very big shortage. But I digress. Let's get back to the excerpt from the newsletter. The next point, labor shortages are real. With 2/3 of baby boomers already retired, construction labor is scarce and expensive. Immigration crackdowns further tighten the pipeline. So labor for construction, very, very big problem. Next point, boomers aren't moving. And that's the baby boomers, of course. Aging in place is reducing housing turnover, leaving younger generations with fewer listings, higher prices, and more competition. All of these facts point to one conclusion, and this is in bold. Rental housing is about to get much more expensive and much more valuable for owners positioned correctly. Right there is exactly the point I have been making for a very long time. All of these factors are just going to push up the prices. And remember, if it's so hard to buy a house, people are going to rent. If gets a little easier to buy a house, then they're going to push the prices up with more demand. Either way, you win if you are listening to this show and you are following my advice. Have you ever wondered how the top real estate investors consistently find the best deals before anybody else? Well, listen up, because this can transform how you invest. I'm excited to share something that's revolutionizing the real estate game. It's called Connected Investors. This is a really cool platform that gives you access to all of the property records nationwide. Truly amazing. It's not just a platform, though. It's a secret weapon. It does a whole bunch of things. Besides the property data, it's a social network as well. It's built by successful real estate investors for real estate investors. Find off-market deals instantly, access accurate ownership contact info, make smart data-driven decisions, and secure funding for your deals from a vast network of private and hard money lenders. Whether you're a beginner or a pro, Connected Investors is your go-to tool for smarter, faster, and more efficient investing. Try a 7-day free trial at jasonhartman.com/connected. Again, that's jasonhartman.com/connected. And let us know how much you love this software. Okay, I want to show you how you can debunk some of these boomers and how they really mislead people. So this guy, Darth Powell, like Darth Vader and Jerome Powell, I guess, is on Twitter, and he's very active there. And occasionally he posts some good things, but he's the ultimate doomer. And on April 18th, he posted this: Phoenix, Arizona housing listings going effing parabolic. Now over 26,000 homes for sale in the greater Phoenix area. Well, first of all, let's remember that Phoenix is the largest capital city in the United States. Over 6 million people, right? You know, in the metro, right? But the actual Phoenix itself is not that big, and we'll go over those population stats in just a moment. So listings, parabolic, right? Doom is upon us. And I say, compared to what? And he says, the last 14 years. And I say, that is, now this guy used to troll me quite a bit, and his buddy, I think it was also him who had another account who would troll me quite a bit. I said, this is very misleading because the population of the United States and the population of Phoenix has increased dramatically over 14 years. If your statistics were accurate, you would do this on a per capita basis. Guess what he said? Nothing. No response at all. So that's when you know you won the argument, when there's no comeback, right? But here are the charts. Here's the actual data. Here are the facts. So 14 years ago, the population of Phoenix was 4,253,485 people in 2011. And this is from the Fred website, the St. Louis Federal Reserve. He's always posting charts from that site, okay? And, you know, everybody uses that site. So here we are last year. This isn't even totally current. It's just to the end of last year. At the end of last year, the population was 5,186,958 people. That's an additional 937,000 people. Call it 1 million people for round numbers. Now, I would have done a full analysis here, but I don't have the MLS data from 14 years ago. According to him, you know, it's way up from 14 years ago. I'm sure it is. There's a lot more people. I mean, the whole market is 1 million people larger than it used to be 14 years ago. Of course, there should be more listings. Now, I'm not saying Phoenix is the greatest market. I mean, you know, there are deals. It's a boom bust market. Okay. This market is I would call it a hybrid market in the past, but now I'd call it just a cyclical market. There is just so much desire to live in a place like that that's, you know, reasonably priced, but not California prices. Okay. So this is a market that we've been in and out of over the years many times. Again, we're area agnostic. So we go where the deals make sense at the time. And when they don't make sense, we stop recommending those deals. Now, We do have a little bit of Phoenix inventory, actually, in, and when I say Phoenix, I'm talking the greater metro area, right? We do have a little bit of inventory there in some selected pockets. So reach out to your investment counselor if you want to know more about those properties, and we'll be glad to help you with those. Or in any of our markets from Tennessee to Alabama to Florida, and Florida, some markets, a little over speculated, right? We've talked about that. But we've got lots of markets all around the country, and we're area agnostic, but you should be investing. Now, this is the same source he cited on Twitter. This is the Cromford report, okay? We've had them on the show a couple of times over the years, and they have some interesting data. They only really do the Phoenix market. So, unfortunately, they're not doing national stuff, at least last time I checked with them. And here they have what they call a supply index and a demand index. And this is April 1st this year, right? So it's very recent. And you can see how this goes back to 2001, where that was their baseline, where they call it a 100, where it's a balanced inventory, right? And you can see how, if you're looking on video, the supply during the Great Recession got way out of hand. That's the blue line here. I mean, it was just enormous amount of supply, the highest ever, and the demand got really, really low and really, really bad. And then it kind of trudges along during through the years, and you see that the demand got really high during the COVID era. The supply got really low. We all know that. That's no secret. But right now, it's almost at equilibrium, okay? The problem is, okay, and here's a thing that I constantly hear from people. They say, well, why not just invest in a market where there's more upside, where when it's booming, it really goes through the roof? Why not buy in, some California market or New York or Phoenix for that matter, right? Because those are cyclical markets. They have glorious highs and really ugly lows. The problem is this. Here is the problem. You can't get the cash flow to work. You can't get it even close in the expensive markets in California or New York or South Florida or wherever, right? Because that's what makes the investment sustainable. You'd have to feed that property for so many years through the bad times. And then, yeah, there might be a boom time in, say, a given 10-year period. Of course, you're going to have it, right? Where the market is out of balance and you're going to see the prices go up a lot. But the hard part is to feed it cash all that time that's not happening and you're not making a fortune, right? Because you can't refi to get the cash out to make the mortgage payments at those down times. So sustainable investing is something I've been teaching for 21 years. And it's really important that you do that. So, for example, we've got Phoenix, right, which is arguably a cyclical market. And we've got some pockets of deals, right, where you can actually make it make sense, right? But there's very few properties like that in a market like this. There's none in California, okay? There's none in New York City, for example, right? In any expensive markets, Miami, right? In expensive Miami market, nothing will work. But here, you can play the linear cyclical thing from the best of both worlds, okay? I mean, it's not the best in terms of cash flow, but you can do it. You can pull it off, okay? So reach out to us through jasonhartman.com or call our investment counselors 714-820-4200 and just press 2 and it'll route you to one of our investment counselors and they'll help you with this market or any of our other markets. Okay, so here is another doomer, right? Jim Cramer. You're all familiar with him, of course. We've profiled his stuff over the years. Of course, he's talking about the stock market, not the housing market. But the New York Post cited one of his quotes here and what he was talking about. It says, CNBC host Jim Cramer warns of Black Monday market crash over Trump tariffs, rivaling the record 1987 collapse, right? That was the Black Monday in 1987, right? And what happened? A bunch of people probably sold their stocks and listened to Cramer, and the market rallied over 10% in the next trading session. This is exactly the type of information on financial media that tricks investors into making poor decisions during volatile times. These moments that should prompt you to ask yourself, am I dumb money? Okay, don't be the dumb money. Stick with a sensible long-term thing. And of course, we think the stock market is organized crime. We all know that. We all probably have stocks, but it's an insider's game. But anyway, it's just a comparison there. So with that, I want to demonstrate something for you. I have had some researchers, if you will, doing some research on the Hartman Comparison Index. And let's just listen to what they say. I thought I saved this, but now I can't find it. So I'm just going to do it again, totally live. Hang on. Okay, so here we go. Tell me about the Hartman Comparison Index.
The Hartman Comparison Index, or HCI, is something I created to answer one of life's most important questions. Compared to what? You see, most people look at housing prices and only compare them to the US dollar, which is a moving target. That's a mistake. The dollar's value fluctuates, and it doesn't give you the full picture. So the HCI compares housing prices to 42 other things. Commodities like gold, oil, and even the cost of college tuition or healthcare. This way, you can see if housing is truly expensive or if it just seems that way because of inflation or other factors. It's all about context, and the HCI provides that context. The whole idea behind it is to challenge the way we traditionally think about affordability and value. Most people look at housing prices and think, wow, that's expensive. But the question is, expensive compared to what? That's the cornerstone of the HCI. It's about stepping back and saying, let's not just look at the dollar, let's look at everything else that holds value. Here's an example. Back in the year 2000, the median home price in the US was about $147,000. Gold at that time was $283 per ounce. If you wanted to buy a house with gold, it would take you 520 ounces. Fast forward to today, and that same house might cost you, say, $400,000. But gold is now worth a lot more per ounce. So instead of 520 ounces, you'd only need about 190 ounces to buy that house. Priced in gold, houses are actually cheaper now than they were back then. Isn't that fascinating? And it's not just gold. The HCI compares housing to 42 different things. Commodities like oil, wheat, healthcare costs, even the cost of college tuition. For instance, in 1970, oil was $4 a barrel, and the median house price was $23,000. It would have taken 6,400 barrels of oil to buy a house. Today, it takes fewer barrels. So, when you look at it through the lens of oil, housing has become more affordable. The point is, the dollar is a moving target. It's not a stable measure of value because of inflation and other economic factors. By comparing housing to a variety of commodities, the HCI gives you a multidimensional view of value. It helps you see the bigger picture and make more informed decisions. It's like having a superpower in the world of real estate investing.
Thanks for listening and happy investing. We will see you at episode 2300.
Thank you so much for listening. Please be sure to subscribe so that you don't miss any episodes. Be sure to check out the show's specific website and our general website, hartmanmedia.com, for appropriate disclaimers and terms of service. Remember that guest opinions are their own, and if you require specific legal or tax advice or advice in any other specialized area, please consult an appropriate professional. And we also very much appreciate you reviewing the show. Please go to iTunes or Stitcher Radio or whatever platform you're using and write a review for the show. We would very much appreciate that. And be sure to make it official and subscribe so you do not miss any episodes. We look forward to seeing you on the next episode.